stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I have a guest. Yes, it's a miracle. I do bring people on occasionally, and it's our favorite guest, Mark Zinski, Zacks small cap analyst. He's back with some small cap stocks for 2026, but you might recall, having seen him on several times in the past, we talked about AI stocks on most of those episodes, and this time there's no AI in these stocks. So what's going on? Mark's going to tell us all. So welcome back, Mark.
Thanks for having me. And of course, we got the big Bears game coming up this weekend.
We do. Just to clarify for everybody, I'm in Chicago and Mark is in Wisconsin. So when it comes to sports, especially football, it can get a bit interesting in our office. That should be a good game. It's going to be a polar type of game, it seems.
It is.
Yeah. That's Midwest football.
I'll still take my Packers 17-6. Anyway.
Wow. I'm not going to go with any kind of score, I'm afraid. But I feel like it will be closer than that score, but we will see, right? The Bears are on a mission this year. Okay, but on today's episode, we're not actually talking about anything that has to do with the Midwest. We are going to focus this week on the East Coast and specifically in Virginia, really. And this is interesting to me because I've been telling people for years, if they are looking around for companies in the areas we are about to talk about, that they should really look for regions that are doing well economically, obviously. But it's not always so obvious to a lot of people. And so this is where you can kind of find the hidden gems in those areas where their economy is doing something right regionally. And I do think it's interesting that we're focusing on this one state. I used to live in the state of Virginia. We'll just say what it is. And I have friends who are still there, and there's a lot of good things going on in Virginia right now. So without further ado, let's just jump right in because everybody just wants stock picks. So we're going to give them to you. Okay, these are all small caps. I was surprised, like when people think small caps these days, a lot of people think, oh, it's $1 billion, it's 1.5 billion market cap. And I look at those all the time and I'm like, this is a small cap, but those are kind of bigger small caps, really. And so it was kind of refreshing to see three stocks that we're going to cover today that all have genuine small cap market caps, but not $1 billion, but even under 500 million. These are well under 500 million. And so when you're looking for small caps, is there a market cap thing that you look at all, or is that really irrelevant from an analyst's point of view?
Well, yeah, I think the finance world has various definitions, but I think that that billion mark is a pretty good threshold. I actually kind of define microcap loosely as anywhere from 0 to $1 billion market cap. Now, some people will go, we'll have varying, definitions of that, and certainly like nano caps, are typically like 50 million and below. I mean, those are the really, tiny guys. So it's kind of, I think, microcap and small cap are kind of interchanged loosely. I I don't think anyone would call you out, on having 100 or 200 million market cap and calling it a small cap versus a micro cap.
Yeah. Okay. Now, I've just been talking about how, all three of these companies are focused on Virginia. Is there a reason you focused on Virginia from your base in Wisconsin?
Well, it's funny, but going through our universe of small caps here that do not have any research coverage on them, and going through the last quarter earnings, it just struck me that here are three names heavily involved in Virginia, and it's probably not a coincidence. And so, and given you've lived there, I think all the stars aligned, and I felt like we could talk intelligently about the area, what's going on there, and certainly the proverbial power of place, can matter as an investment theme in the investing world. So,
yeah, for sure. Okay, well, again, let's just dive right in on the first stock. So we're going to talk about Comstock Holding Companies, and it's ticker CHCI, and they have a market cap of 135 million. They are real estate developers, and so off their website, they said they have 10 million square feet of mixed use and transit-oriented properties located around key metro stations. And anyone in the DC area knows the metro is the subway. They are in the high-demand Dulles corridor with commercial, residential, hospitality, parking garages, and then they do the property management as well. And then I saw on their website that they are developing the Row at Reston Station, which is in the Northern Virginia. It's a suburb of DC. And that one has commercial, residential, and I thought this was interesting. Their residential portfolio is now 96% leased as of the last quarter. And they're also selling condos in that the Row development. And the commercial aspect of it I thought was interesting because they are actually leasing out the commercial side. And you would think that would be a surprise, like that the office side would be the slowest part of that whole development. But they said that 1870 Reston Row Plaza is now fully leased. Yep. So is this a play on Washington, D.C., its economic power? It's been an economic powerhouse for 30 to 40 years now, I want to say. And, it has a big tech industry. It's not all just government, but obviously the defense side and government is a huge driver there as well. But it has high income, and even with DOGE having gone in and done some employee cuts, it doesn't seem like that's really impacting that much.
Right. Yeah, I think it is geographically an ideal profile. And just to clarify that this is not a REIT. So
right.
They do not,
good point.
They own some properties. Okay, through JVs and one and some land that they own outright wholly. But this is a service fee-based real estate play. So if you're looking for real estate exposure, this is a way to get some in a fairly, I guess you'd say, a risk stratified way. So they're making money off of asset management fees, off of property management fees, and then actually also their parking management segment, which is actually growing very substantially and is about 25% of their revenue now. So they would charge, per their K, I'm seeing, for instance, on the asset management side, they'll charge 2.5% off of the portfolio revenue. So I guess you kind of classify these guys as kind of a real estate operator that's able to, organize and bring.
Seems like on the service side.
Yeah. And that being said, the portfolio that they have exposure to through these contracts is not fully developed yet, right? So they're still built. So the pipeline of build out for these various locations, i.e. Reston Station, Loudon Station, is still pretty substantial. So, in terms of, square footage, there's still a lot of runway left that can be monetized. So this is not, this isn't going to be a multi-bagger in the near term, just to clarify. This is a nice, I believe, a nice steady eddy, that should have just nice, consistent growth, going forward. That has a decent runway. That being said, this last quarter, this Q3, had some noise in it. So over the last 5 years, they've been growing their adjusted EBITDA at a CAGR of 35%. This last quarter, like I said, they had some noise because in the prior year quarter, they had some lease termination revenue, which was fairly substantial, like to the tune of like $1 million. So that was non-recurring. So year over year revenue growth was only 2.5% for the quarter. But again, year to date over the 9 months, it's still 13.2%. So this last quarter was a little bit of a one-off. Consequently, the stock has pulled in here, which I think makes for a good entry point. Additionally, on the cost side of the equation, they had some noise as well. So like I mentioned, that parking business is really ramping up. And within that parking business, they also have additional services like concierge, residential living type of services like that. And so they've been hiring. They hired over 100 folks. I think 100 folks this last quarter. So they had a real spike in personnel expense for the quarter. So that hasn't been absorbed yet. So I'm basically kind of giving them the benefit of the doubt as for the quarter being somewhat of an investment type quarter to get these new service infrastructures in place. Just to clarify, those services are like janitorial and porter services. So as Tracy mentioned, you're talking mixed. This is a super mixed use model, and we've seen this throughout the U.S. And it clearly seems to be working here with that combination of not only the residential, the condos and apartments, but like you mentioned, the commercial aspect, the office. They have quite the headline print with signing Booz Allen as a tenant for a fair amount of square footage there, which is kind of a high profile name. So, return to office and, just that location, right? Because even as we see with the financial firms and the law firms, they still want to have an office in the major metro areas like New York or DC. So when clients come in, there's a place, to host them, obviously. So, and of course it's along the metro as you mentioned. So, so I'm looking, given this history of execution, operational execution with that adjusted EBITDA growth, this little hiccup in the last quarter here, I think it's an attractive, place to enter. It's trading at like 10 times trailing EBITDA, which relative to their peer group suggests it's undervalued. The balance sheet's strong with $26 million in cash, and then they also have a $10 million dollar line of credit. So this is an asset-light model with recurring revenue, right? Because these are contracts, going off of the monthly rents, and I just think that this is a good way to play, this real estate corridor.
Yeah, me too. I do find it intriguing as a real estate play because not everybody wants to own the REITs. You don't actually want to own the building, but to own the property management side of it is a little less risky, I feel.
Yes.
And just so everyone knows, as you mentioned, this is not a REIT, and they do not pay a dividend.
Correct.
So
Correct.
You are not getting anything for your patients.
So the bet here is that that development pipeline, which is still considerable, that they continue executing and keep growing out that portfolio of basically square footage, right? Whether it be the commercial, residential, but they also have the hotel as well.
That's right.
So
right.
There's
the JW Marriott.
So there's a lot going on there, and as you mentioned, the leasing rates are quite high, which I think, especially in this kind of semi-choppy macro environment, I think is very encouraging and speaks to location. So
yeah, for sure. Okay, so that's Comstock Holding Companies. The ticker again is CHCI. Okay, we're switching to the next company, and it's CNF Financial, which is ticker CFFI, but this is a bank.
Yep.
And why are the banks intriguing now?
Well, so this one and our next name are both banks, or regional banks serving the Virginia area. Just to give a little primer on investing in banks, they're obviously, not as sexy as, sorry bankers, as
definitely not
as AI, et cetera. Because you live and die, by the spread and the yield curve, I think, which is fair to say. But that being said, there are some other kind of ancillary catalysts that you want to look for when you're analyzing a bank. And Tracy mentioned it. You want to have areas that have good income, good median income in the communities, decent population growth, right? Good business activity, so a good, strong regional economy that accommodates loan growth. And so, again, these aren't going to be multi-baggers anytime soon, but these are, in my opinion, should be nice steady eddies. And so, CNF Financial Corp, which is based in Toronto, Virginia, I thought was very intriguing. So, first of all, it's trading just at it's actually trading a little bit below book value, about 10% below book value. So that's a very good place to start, with a bank, because that's the primary valuation metric that folks use. So I think it's attractively valued here. It's profitable. So that's a good entry point at that valuation. You're also clipping a 2.7% dividend yield. I'm sorry, while you eat. And this is a little bit of a, in my opinion, a set it and forget it kind of a play. So that being said, the real catalyst here is that they're expanding into Southwest Virginia, and so they've opened up an office in Roanoke, and I would expect, given they've done this in the past where they've attacked a new, sub-market within Virginia, and they've had success. Their current markets, they tend to have very, hefty market shares. So the bet here is that they're going to go into Southwest Virginia, expand, have success, and gain market share. And so that, a multi-year, steady Eddie kind of play, in my opinion.
In July, that's when they announced they're going into Roanoke. Mm-hmm. They also said Lynchburg, Danville, Martinsville, and Blacksburg. And for anyone who's not familiar with any of those cities, they're all in the mountain there near Roanoke in the Southwest, as Mark was just saying, although Danville's a little bit to the south on the border. And so those are kind of towns that are definitely growing, and they do have a little bit wealthier people moving in now, and I attribute that to the baby boomers really trying to find smaller cities to retire in, and the Southwest region gives you a lot of attributes that the baby boomers are looking for without the sky-high prices that have been known in other mountain cities like Asheville, for instance. So, I thought that was very intriguing that they're going there. In their second quarter, they did post a interesting little graphic in their investor presentation. So I'm going to, for those who are watching the video, I'm going to show it. It just shows the state of Virginia, where all their non-Northern Virginia footprint is. And so people think a lot about where Comstock is along the metro lines. Those are very booming counties in Northern Virginia there, Arlington, Fairfax, etc. And these counties are, in other parts of the state, and that is still growing, especially the Richmond area, which is shown on this map. They have Charlottesville Metro on here, and Charlottesville, home of the University of Virginia, but a lot of retirees want to be there as well, and just anyone really, because it's very beautiful. Also, not a cheap area of Virginia anymore either. And then they do list Fredericksburg Metro, which you can get to DC on the train from Fredericksburg, not the subway, but the actual Virginia commuter train. And then they have the peninsulas on here too. So this is a good visual, and now they're expanding in the Southwest, and you can see Roanoke in the little red star there on the left side of the picture. They have a market cap of $224 million, so a little bit bigger than Comstock, but these are still small cap stocks. They have 31 banking offices, 5 commercial loan offices. One of the interesting things I feel like a lot of these smaller banks are doing now is they're really moving into like wealth management. That's where, and maybe that's because of the baby boomers, but they can drive a lot of business through trying to get some of that wealth management in, and they definitely have that.
That actually, the wealth management is a great growth vector for these regional banks, because you don't have exposure to interest rates, right?
Right.
It's a great way to diversify. I'm not at this point. I didn't see them divulging, wealth management services. The next bank we're going to talk about, that's a more dominant vector for them. But this last quarter, though, you had CNF had 7.9% loan growth, and net income was up 31%, and their NIM, their net interest margin, also improved favorably. So, they're setting up a loan production office. They must have confidence in the market and confidence that they can continue with the loan growth. And given bank's profitable, they're trading a little bit below book value. and you're clipping a 2.7% dividend yield, I think it's a good set it and forget it, and let Southwest Virginia that business grow.
Yeah, for sure. Okay, let's switch to the third stock, which, as you've mentioned, is another bank. It's the bank of
One
the
last thing about CNF. One thing you do want to keep your eye on. They do have a consumer finance division. In 2024, that was about 12% of revenue. And so, as we know with the banks, we're starting to see a little bit of pressure in that consumer finance division, whether it be auto loans, et cetera, of people getting behind on payments. There's nothing, again, it's a relative, at 12% of their overall revenue. It's not a huge component, but I just wanted to make sure I cited it as a risk factor. And I'm not, at this point, not seeing any major write-offs there. But it is something to, keep an eye on.
Yeah, definitely. I think people are keying in on the loan health right now. Okay, so the third stock, going to that one, is Bank of the James Financial Group, and it's ticker B as in boy, O, T as in Tom, J, and they own the Bank of the James, and a company that's a registered investment advisor. So that's probably their, wealth management side. And also in Virginia, they're in Central Virginia. And this is a newer bank. They were founded in 1999, but CNF was founded in 1927. And all over their website, I noticed they kept emphasizing they want to be a local bank. No automated messages when you call. You're not speaking, pressing the buttons on your phone to talk to someone. And one of their key phrases, they said, your bank should be your trusted partner. And then they also talked about how they don't have offices in some far-flung state, that they are local, and so they can meet the needs of the locals. And I thought that was interesting because that is how they're differentiating themselves from the big, JP Morgans of the world, or even a big regional bank.
That's what my dad always preached to me. He's like, get to know the loan officers at your local bank, because you never know.
Right. And that's hard to do. Like they are pointing out, like how do you know someone at your JP Morgan Chase branch? You really don't. So they really are emphasizing that. They're headquartered in Lynchburg, but they serve the Lynchburg metro area, Charlottesville, Harrisonburg, Lexington, Nellis Ford, Roanoke, Buchanan, and Wytheville. They have kind of like a basic, it seems like a basic banking portfolio, commercial and residential, like mortgages and things. But what stands out from this smaller bank? They have a market cap of just 80 million.
What really stands out to me, well, first of all, they do have that additional growth factor, the wealth management segment, which is, I think, about 3 or 4 million of the non-interest income, which is about 11 million. So fairly substantial. So it's always, I'm biased. I always like to see that wealth management as a growth factor. I understand that, the CNF doesn't, or at least doesn't divulge that at this point, but it is something I definitely like to have an extra leg on the stool, as they say. To limit your interest rate exposure. But what really stood out to me was this Q3, their net interest margin, so their spread, increased to 3.44% versus 3.16% in the prior year. And what's driving that is, and I've seen this in actually several of the banks under our coverage, banks had borrowed from the Fed, and I'm not sure if it might have been, during COVID in particular. And so these guys have paid off their $10 million note with the Fed. And of course, the borrowing costs on that were higher. So that's now gone. So, so their costs, their funding costs for this last quarter were down materially. So I would expect going forward, the next 2 to 3 quarters, they should still get that year-over-year benefit in lower funding, which is huge because, as we said, this is essentially a spread business. So that really stood out to me. Another thing is they're trading a little bit above book value. So I think the valuation is attractive here. They're profitable,
Yeah.
so trading at a little bit above book value, I think, is a good entry point. Also, importantly, they don't have any exposure to large metro offices. So if you are worried about, the office, real estate market, whom these regional banks tend to bank, you don't have to worry about that because they don't have exposure there. 2.27% dividend you can clip, while you're waiting. In this last quarter, this Q3, their EPS was up 38% year over year. And
Wow.
Their strongest quarter on record. So they clearly, have some momentum there. And also decent loan growth in commercial real estate as well. The thing that funding cost year over year should continue to help with some EPS growth over the next several quarters. And so that's really why I like the name, and the wealth management is a nice kicker there.
Yeah, I am a big fan of these smaller banks, as people know, but it is always more difficult to find the quality names because there's so many small banks.
Right.
And then neither of these two banks or any of these three stocks have a Zacks rank, so they wouldn't even come up on my screens normally. That's why I bring you on to show us these hidden gems.
And we've got outperform ratings on all three of these names, and so we'll put the link under our video here so folks can access the latest research reports.
Okay, great.
I think a more general thing to discuss is, in talking about this whole AI phenomenon, and we can debate whether or not it's a bubble, etc. The data center infrastructure build out, I think, is something to keep an eye on, and to see, because even at work, when we talk about what are the bubble prospects, of the AI phenomenon, we kind of all seem to agree that at this point, it's kind of isolated among these Mag 7 players, right?
Yeah.
And if this thing doesn't work out for them, it's a write-off for them, right?
Right.
It's not so much, a potential systemic contagion, like the subprime mortgage, lending thing was. So I keep an eye on it to see if these banks are disclosing exposure to the data centers.
Right.
Because that could be a burgeoning risk factor that we want to keep an eye on, because we do know, right, the question is the data center build out too much? I mean, we do know that they tend to depreciate relatively quickly. And so it's something to keep an eye on, because banks historically, they've gotten in trouble when they kind of go out of their comfort zone and they try to,
try to chase those
the hot markets, whether it be real estate or like fracking, oil. All of a sudden, when they don't really have the expertise in those particular industries, and they chase it, and the next thing you know, there's a major write-off. I would just say that that's something to keep an eye on.
Okay. And I wanted to show what's going on with these stocks on the chart. So I brought up all of them here, and you can see Comstock is the one in green. And I did put the S&P on here too. This is the year-to-date chart that I'm starting off with here. And, or I didn't put the S&P on, sorry. I put the Russell 2000 ETF on there so that we could kind of see a comparison with the small caps in general. And year-to-date, I know you said there's not any multi-baggers here, but Comstock is having a pretty good year.
Yeah.
Is there a reason why it started surging over the summer? Or was that simply because Doge was basically done and all of the worries about layoffs and like people leaving the DC area or whatever we thought was going to happen didn't happen? Is that maybe why the rally?
I think that's a good guess. I mean, these guys clearly, have been executing on adjusted EBITDA growth, and and as you alluded to, the leasing rates are very high. I mean, that kind of that says it all right there. I think it's just it's the power of place in this case. It's a very good spot to be in. It's on the metro. So
but even just looking at this chart and the smallest bank, the Bank of the James here, which is in blue there, it's up 15% year to date. That doesn't include the dividend, and that's a nice little year too for a small bank.
Yes, it is.
So
we
like to think
Bank of the James we launched on fairly recently, but Comstock I think we launched on about a year ago, so that's been had nice appreciation, and CNF I think was about 6 months ago or so we launched on.
Okay.
So
in general, I've noticed the smaller banks have had a few little mini rallies this year, but are still kind of waiting to break out, even though they're all mostly cheap.
Right.
And, they're just very cheap.
Yep.
And nobody's paying them much attention. So I do like the banks for next year. I have done a couple of other podcasts on small banks, but not ones that are even this small. And the valuations look outstanding.
Yeah. Well, that, speaking of the Mid-Atlantic there, another intriguing area is that Delmar Peninsula. There's a lot of nice growth going on in there. And so that's, if you can find banks that have exposure to that area, that definitely is a good starting point. So if you do your homework and you find some good spots that have some good population growth, as you said, retirees mean probably good healthy deposits and probably low cost deposits, and that's what you need if you're a bank.
Right.
I sometimes marvel. I'm like, what's it's not a complicated business.
No.
So.
And they need certain commercial services that, come into play once they arrive.
Well, and what I noticed too during COVID, there were some banks like out in kind of like the mountain region, right? Like Montana, Wyoming. When people, you recall, the more affluent people were kind of flocking there as a getaway from COVID. They had these second houses or whatever. And but they're using their, the bank cards from their home state, and so the fees that the interchange fees that these banks were making out west, was pretty considerable. So, I mean, that's another way you can kind of, think about these banks in terms of on the revenue side, the fees, because
Definitely.
and that's kind of a very important growth factor, because then you limit your exposure to interest rates that way. So
I'm also putting up the 5-year chart here so we can kind of see what's happened with these stocks over the 5 years. And all three are outperforming the Russell 2000 ETF. That's the orange one, IWM. It's up 31% over the 5 years. Bank of the James is up 57%. CNF is up 87%. And then Comstock up there with the big gains, thanks to this year, really, up 321% over the 5 years. So all of these are pretty impressive performers based on, not the S&P 500, based on the Russell 2000, which is their benchmark.
Mm-hmm. Yep. Oh yeah. Before I forget, too, Comstock, it also looks to be doing some development over in Rockville, Maryland.
Okay.
They actually own the land there, and that's on the Metro line as well.
Yeah.
And so, and that'll be, I think it's a little more nascent at this point, but it's something to keep an eye on as to, how that develops for them as well.
Okay. So there's some small caps for 2026, and you might want to just keep your eye on these banks. And I always encourage people, no matter where they are in the country, to investigate their nearby smaller banks. Because sometimes, where you bank, it gives you kind of the inside edge. You might know more than the rest of us about what's going on there and what's going on in your town. Is there development? Are they building a data center? Is there a new hospital going in, hotels, some sports arenas, any of this stuff? Are people moving there? Is there population growth? Those are all keys, as Mark talked about. So, any final thoughts?
No, I think that, these three names, have good profiles, and, two of them also, offer a dividend, which is nice. I think the banks just, they're trading at or a little bit below book value. I think that's attractive, and they have some possible growth vectors. And frankly, it's kind of rare to come across banks that have multiple possible growth vectors. So,
right.
So I think that's what makes these two names, those two banks, very interesting. And Comstock is, a location play, and I just think with their leasing rates so high, location is winning out.
Definitely. Do you own any of these in your own personal portfolio, or does your family own any of these?
I do not. We do not.
Okay. And I do not either. This is my first exposure to any of these, but I will be putting them on my watch list for sure. So let me recap those tickers again. We had Comstock Holding Companies, CHCI. We had CNF Financial, CFFI. 2 F's in there. C is in Charles, F is in Frank, F is in Frank, I. And then we had Bank of the James, B as in boy, O, T as in Tom, J, BOTJ. And as always, coming up in 2026, hopefully Mark will be back with some more small caps as we get that year up and running. But you want to be sure to subscribe to get all of our podcasts. Get us on YouTube. We're on Zacks.com/YouTube over there. Just put in Zacks Investment Research to get this video podcast. But to get the audio, get us on Apple, get us on Spotify, get us on Amazon Music, or just about anywhere you can get the podcasts. And we'll see you again. I will several more times this month here in December of 2025 before we turn that calendar, and we will be in 2026. Always an exciting time for